Hey guys, alrighty. So today was CPI day. You just never know what this market's going to bring. Going into yesterday, I had said that I thought we had a very bullish technical setup, meaning that the actual price action that we saw, this massive bounce in this doji reversal candle, kind of like we saw here and here, was a very bullish indication going into today. However, we couldn't ignore the fact that the data that we expected, and again, my prediction, I pretty much nailed the CPI prediction. I got CPI year over year going up from 3.1% to 3.2% correct. I did have CPI month over month at 0.5%. We ended up getting 0.4%, which was still um, an increase, or sorry, that was unchanged from previous. And then we had core year over year come in at 3.8%, which is what I expected, which was also just down 0.1% from previous, but higher than forecast. And then core month over month came in at 0.4%, which was higher than previous. So honestly, not a cold CPI by any means. Having this year over year rise again, failing once again to go from 3.1% to 3%, failing to see the twos again. The only real bullish number I can see here is the fact that core year over year actually came down from 3.9% to 3.8%. So that actually is a 13 months in a row that core has unwound or remained unchanged. So that's a big bullish thing there. But the question is, why did we rally today? And I don't really think there's a great answer. I think a lot of people are relating it to the fact that volatility was so high. VIX was at 15.8 area going into CPI day, which that's already the 4-ish month high area. So that's not a great odds that it's going to continue to go higher. But also betting against the fact that just because VIX is elevated that it can't go higher, that's not a good reason not to take a play. But it is what it is. So now the question is, where do we head next? Right now, something to think about going forward. Next Wednesday is FOMOC meeting. As of right now, the market from yesterday to today has pulled back on expectations. So, remember we started the year off with about 6 to 7 rate cuts priced in. We are now looking at 3 rate cuts priced in. Now, remember, that is what the Fed's expectation in December at the dot plot was. As of right now, we will get another dot plot, and that will come at the FOMOC meeting on Wednesday. Now, I am very curious how that dot plot's going to play out. I think there's a very high potential we are going to see the Fed pull back on their rate cut expectations even more. Remember, Jay Powell said, I need confidence in numbers continuing to look how they look now before I cut. I can't imagine a world where Jay Powell is comfortable cutting with a CPI month over month at 0.4%, which has been rising for, I believe it's 5 months in a row now. Also, CPI year over year is still rising and is holding the same basically 0.4, I think it is, percent range for almost 6 months also. There's no way Jay Powell's going to say we're confident that June, which is only going to be 2 meetings away, that we're going to be able to cut rates. So I would not be surprised to see them pull back and maybe expect the first rate cut to come in September, maybe November. I'll be very curious to see how that plays out. But I'm mostly going to be curious to see how does the market react to that. Is the market going to believe Jay Powell this time? Or are we going to see, like we saw in December, where the market does not believe the Fed and the market says the Fed's wrong? So I'm curious to see how that plays out. Big week ahead next week. But let's take a look at here. So we had 514.87 as our supply. We got a new demand today at 510.44. So now we have a triple demand support area right here. Nice bounce off the 8 EMA support, completely gap filled. And boom, now we popped up. So closing up here, we at high a day, we're only about just under $1 from all-time high. So very, very likely that we see SPY push to all-time highs tomorrow. And I really think we could target this 520 to 525 area. Now we do have our, our rising wedge that is forming here. I need to adjust it just a little bit because TradingView just always messes with my stuff here. But you can see here, really going back all the way down here, you can see we have this super steep support line, and now we're kind of finding a resistance line here. So, that potential for tomorrow, sorry, I just hate scrolling here on TradingView so much sometimes. So tomorrow our potential is 520.59 if we maintain our rising wedge here. Now going over to ES. Now remember, we contract rolled yet last week. So again, on futures it rolled here on TradingView Thursday. But same thing, we're broken out here. We're looking for maybe the 52.94 area, and support now is down at 51.58. Going over to the Qs. So today's rally, especially at open, was certainly not led by tech. A lot of today, ES was the leader, and even a lot of last week and yesterday, tech was the laggard. Tech was not following with SPY. So what I'm watching here is that if you see here on Qs, and it's going to be much easier to chart this on Qs than it is on ES, because ES and NQ have their contract roll this week. So if you look back here from pretty much back here, January 19th until really this day right here, when we popped through, we had a really nice range forming. We're kind of forming a tighter but similar range here. So we have support at 435.13 and a new demand today at 437.22, but we have this double top resistance supply at 445.72. This is a major resistance that I'm watching. If we cannot break through that tomorrow, we very well could be heading right back to double demand. Now, this generally, I see this as a continuation candle. I don't really see this as a reversal candle, but there is a very high probability that we could double top or maybe even come up, touch 445.72 and get a doji rejection, kind of something like this here, or maybe even a day like Friday. Now, going over to NQ, same thing. Remember, we had our contract roll, but we broke through our resistance. So per contract roll here, our all-time high after contract roll is 18,691. So, we got about, 200 more points to go roughly to get to all-time highs. But same thing here, I don't have the support line right now just because I was adjusting it for the contract. So let's go ahead and throw that on there just for you guys to see. But so here is, there you go. So there's our rising wedge right here. So rising wedge wise, resistance, I mean, geez, we have all the way up here into, 18,945 area. I don't think we break out like that tomorrow, but we'll see how it plays out. So here's our VIX. You remember yesterday I was saying that we had this really interesting double top rejection here, 15.554. So that was kind of one of my signs yesterday going into CPI today that maybe we were going to see a bit of a sell-off today. Maybe we were not going to get the big negative reaction. So we got a big 9% drop. So now, we're starting to look at our trend line. Again, remember, we have this trend line dating back to December where we have not made a lower low. Tomorrow is VIX expiration day, so that will bring some volatility in the morning also. But one thing I'm seeing here is that, we have a potential to base right here, put a new demand in, and then head back up. So as we go into FOMOC meeting Wednesday next week, I would not be surprised to see the VIX re-elevate. Going over the dollar. So I'm not really watching the dollar and the 10-year very much anymore. Really for the last almost 2 months now, of course, when I started watching it, when I thought there was a correlation. And, there has historically been correlations. It just hasn't been correlating enough where I can find an edge that makes it worth my time. But the one thing I am seeing here is that there is a potential V bottom forming here on the dollar. And then going over to the 10-year, same thing. We had a potential bear flag that looks like it's failing, and we could too be V bottom. So we could see the yields and Dixie or the dollar going higher, which will make it again harder for the market to go higher. Going over to Bitcoin here, we're still rallying. You know, we're making all-time highs. We hit 73K. See where this pulls back or not. If we close out a weekly doji here, I do expect a nice drop into the end of the month here. So, all right, guys, I hope you guys had a good day trading today. Price action's been rough. You know, tread lightly. I only found one trade today that I could get into. And yesterday I traded a couple trades, but nothing great. This price action is hard. This price action doesn't make a lot of sense at times. We are seeing candles that one day, you know, we have a long wick to one side that usually would indicate a reversal is coming. And then out of nowhere, we're getting a drop. Or sorry, we're getting non-reversal. Numerous times today, we had doji candles, long wick doji candles that should indicate support and should indicate we're going to go higher, only to fail and drop out of nowhere. We're seeing a lot of times where we're rallying without proper buying support or selling support without dropping. We're just seeing a lot of things that doesn't make sense, that makes it very difficult to properly trade, properly find good setups. You know, I used to find like 7 to 10 good setups a day. I feel like now I'm finding 2 to 3 at max. It's just so hard to find a solid setup. And I think a lot of it's just related to options. You know, we have so much put into 0DTE options right now that it's hard. You know, we're getting some weird squeezes and movement, and it's, you know, it's difficult. It's difficult to get good solid setups when that's kind of how stuff's moving. So, but I hope you guys had a good day today, and I will see you guys tomorrow.